Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Most Asia-Pacific equities rose earlier today, with the exception of Hong Kong and China. Stoxx 600 in Europe has recovered most of yesterday's losses and U.S. futures trade higher. Yesterday's gains were lost by the U.S. dollar and it is currently trading lower. Despite the lower yields and weaker USD, gold is still soft. The October WTI is moving back to $95. Today, it is at 1.75%. Asian Pacific market. Japan reported that July's unemployment rate at 2.6% was unchanged. Unexpectedly, the ratio of job seekers to applicants jumped to 1.29 from 1.27. However, the rises in the yen are more due to the decline in U.S. yields and not the changes in Japan's economy. Tomorrow, Japan will report July industrial output. This is likely to be after the 9.2% increase in June. It was likely that the slow response to reopening Shanghai had a little bit of an impact. The opposite trend is seen in retail sales. After reaching JPY 139 yesterday, the U.S. rate has been softened and the dollar has moved towards JPY 138.15. Yesterday, the Australian dollar slipped below the neckline of what could be a head and shoulder top, but it recovered to close above it, $0.6850. Market of Europe. The Eurozone's August inflation is the focus of attention ahead tomorrow's aggregate report. Spain started with 0.1% month-over-month growth, which saw the harmonized annual pace of inflation ease for the first 4 months. All German states reported that the year-over-2018 rate was 0.1%. However, the month-over-month change slowed 0.2% to 0.4%. Germany's inflation could reach over 10% due to the rise in energy prices. On September 9, the EU will hold an emergency meeting of energy ministers to discuss how to coordinate a response. Yesterday's $0.9900 zone held and the short covering bounce in euro started. Sterling's recovery from yesterday's 2-year low, $1.1650, seems less inspiring and has not been in a position to surpass yesterday's high of $1.1785. Market of America. Tomorrow, Canada will report its second quarter GDP. It is expected that it will have increased to 4.4% from 3.1% in the previous quarter. Despite today's modest gain against the U.S. dollar, the Canadian currency is still down 2.7% this year. The exchange rate is driven by the wider risk environment. Take into account that Canada had a 47 billion Canadian dollar current account deficit in 2019 prior to COVID. Canada would have a 6.8 billion CAD surplus in the second quarter, which would translate into a surplus of nearly 11 billion. August saw the US dollar reach a new record high of CAD 1.3075 before falling back to CAD 1.2990. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.